talk a little bit about what's been going on the mining side of things, on the investment in the overall kind of infrastructure of Bitcoin after these moves by China to restrict some of that. How does that feed into, if at all, to the trading price of Bitcoin?
Yeah, definitely. So, the Chinese clampdowns, they started around mid-May. We saw more than 50% of the network hash rate come offline during that period. So we went from 180 million terahashes per second down to around 89 million terahashes per second. In the long run, I think this is a net positive for the Bitcoin sector, and I think a lot of folks agree with that, and I think a lot of market participants would agree with that. So what is happening now is we're seeing some decentralization of some of this mining activity. And so maybe in the short term, there was some volatility in markets because of that, because miners might be, selling Bitcoin in order to get more liquid so they can move to different countries and start up some of those operations. But, right now for the miners that can stay online, so U.S., Canada, Central Asia, other regions outside China, they're going to just be operating at higher profit margins. So we have a network difficulty coming up today where it's going to be the largest network difficulty adjustment in Bitcoin's history. It's going to fall 27% due to the hash rate coming offline in China. But what that does is it makes the miners that are online remain more profitable, right? So, I think some of the market volatility has come from some of these Chinese miners going offline. But in the long run, it's going to increase decentralization. And, for the miners that can stay online, their profit margins are just going to increase.
Just to zoom in on that point about the difficulty of mining going down. So the system kind of regulates itself, right? So it counters the fact that there's less computing power being dedicated to mining new ones, so it makes the complexity of those calculations lower. So in other words, it doesn't necessarily change the number of Bitcoin that are going to be brought into the world. It just kind of is about miners' margins at that point. But how much of the activity, just in sum, is mining the stuff, investing in the mining of the stuff, trading it, doing arbitrage against the futures versus anything else that is getting accomplished or transacted in Bitcoin?
Yeah, I would say most of the activity in Bitcoin and other crypto assets as well is still financial transactions, and most of that is trading, right? Outside of that, sure, there's some miners that are hedging their months, and so they'll look at Bitcoin futures and hedge out some of the risk that way. But for the most part, a lot of it is trading in the space. A lot of it is speculating. A lot of it is, funds looking at Bitcoin as an alternative store of value to gold and want to get exposure that way. So still a lot of it is investing. You do have some payment applications, right? You have the Lightning Network that's done a phenomenal job. You saw El Salvador make Bitcoin legal tender in the country. So you're starting to see some more of the payment adoptions. Some of these crypto networks can be useful for remittances because the fees can be lower relative to traditional payment processors. So there are some applications outside of the trading activity going on in the space. But I would say right now it is still mostly dominated by investment and trading purposes.
Yeah, and John, it's Morgan. I mean, certainly payment adoption is in many ways the holy grail when it comes to mainstream adoption and use of cryptocurrencies like Bitcoin. That being said, when you have a clampdown in China or you have central banks, and I'm thinking about Mexico or even some officials here in the U.S. earlier this week, pushing back against Bitcoin, is that negative for the cryptocurrency, or is that actually positive and bolster the use case for it?
Look, I mean, it would be great if every country around the world embraced Bitcoin and, central banks added it to their balance sheets. That would be terrific for the space. But the reality is that's just not going to happen, right? I think what came out of China, speaks more to China than it necessarily does to Bitcoin, right? So China has regulated Google, Facebook, other companies in the past. So, for them to go at an open source financial network like Bitcoin, that's, I think sort of par the course. Other governments may take a different approach, but I think, as we've seen with El Salvador, the U.S. has actually been fairly regulatory, beneficial to the network and crypto assets on the grand scheme of things. So, I don't think countries are necessarily going to step in and really kind of clamp down like China did. I think that was more specific to China. Now, to your point about CBDCs, yeah, some of these other digital currencies that are issued by a central bank could come out and certainly compete with Bitcoin and other payment networks like Ethereum and stuff like that. I think the overlap right now with CBDCs are less so Bitcoin and more so stable coins. So, you have these private networks issuing stable coins, and I think that's really going to be the overlap with CBDCs.
Shepard Smith here. Thanks for watching CNBC on YouTube.